Hello and welcome to another edition of the Forex Technical Market Update for Tuesday, October 6th, 2015. Okay, in front of us we have a chart of the US dollar index, and what I'm showing you is a consolidation that the US dollar index has been in for the last couple of months. We have some resistance, some intermediate resistance up at this 96.50 to 96.60 level, and I will draw the line at this resistance level. So this area is providing some resistance in the market at this point in time. The US dollar index is down this morning, and what we see is that we are in a consolidation pattern, but we are also in a consolidation within a consolidation, as the market over the last month or so has been stuck between 96.50 and let's say this low here of 94. So the market is doing a triangular consolidation within a consolidation. So yes, we have a consolidation within a consolidation. So the US dollar index is not really doing that much at this point in time, and the positioning is one day it's up, one day it's down. But we are definitely looking for what will be the thing that will break the US dollar index out of this range, and let us start really moving on the index. So resistance up at 96.50. We have some support at 94, and longer term support is down in the 93, 92.50 region. Now, what would consider a break, or what I would consider a breakout of this consolidation pattern, is a weekly close or below this level, 9300, 93. If you see the market close, the candlestick close on a weekly basis below this level, I would consider that a breakout. Or if the market on a weekly basis closes above, even though this is a triangle here, I would like to see the market close above this 98.50 level. So if we do get a close above 98.50, that would be bullish for the US dollar index, and we could see further gains. And the reason why I'm looking for a weekly close above or below these levels is because this consolidation has been in effect for so long that we do not want to see a lot of false breaks. We want to see that the market has cleanly broken the resistance or support levels, and that would definitely prompt one to act. And when or if that does happen, you have to be prepared to really act and pounce on the opportunity, because we could see a fairly large move in the market. Okay, looking at the euro. The euro is up slightly on the morning at 112.26. There's intermediate support at the one in the euro at 110.87, and resistance is at 114.13. So those are the levels to look out for in the euro at this point in time. We're still in a consolidation pattern with the euro, and we see that this is a prevailing trend line, and we could be in a channel, a reverse flag type formation. And how these normally pan out is that the market will go down, go into a flag against the trend, and then the market breaks to the downside. That's the rule. And would the market follow this rule at this point in time? Maybe not. I would say about 80% of the time it will follow the rule. The other 20% of the time it would not. So that is the rule, and you can do what you want with the rule. Looking at Australian dollar is recovering this morning, but we have resistance at the 73 level and support at 69. Now, yesterday, interestingly, the US stock market was up and up significantly. And I have spoken about the fact that we could be at a W bottom. And what we want to see is that the market come down. This is the W. And what we're looking for is a break above, to complete this pattern, a break above the 2020 level. And we did have a positive day yesterday in the S&P 500. Market closed at 1987. But what will conclude this W pattern is a close above the 2020 region in the S&P 500. For those of you who trade the stock market, I know some of you, and what I advocate is, if you have the capital, trade, look for different markets. So look at the currencies, but also look at the stock market or look at the commodity markets, because some of the principles that we speak about here can be used in other markets. And while the currencies sometimes are stagnant, other things are happening in other markets that you could take advantage of. So the S&P 500 is definitely one of those. And if the relationship between the S&P 500 and the Japanese yen continues, we could see a rise in USD Japanese yen. Yes, the market is still in a consolidation, but if we see the stock market really start to pick up to the upside, if the relationship does hold, we could see the market break above this 122 level. With the Japanese yen, as I said yesterday, I want to see the market break above 122 to the upside or below 116 to the downside, and that would signify to me that this pair is on the move and ready to go. Another market of interest is the Canadian dollar, pulled back to just above support at the 130 level, and we see the US dollar gaining some ground this morning against the Canadian dollar. A close below this 130 level could open us up to a deeper pullback to test 128 and even 120, 126. Looking at the gold market, we see that gold was down slightly yesterday, but is recovering today. And this again is in a consolidation pattern. And with the US dollar not moving much, I guess gold decided that it won't move. It would remain stagnant itself. So this is the picture in the gold market. Bear in mind that this market could definitely break to the downside further. For some reason, I feel that gold has not finished declining, and this 4-year bear market in gold could continue some more, and we could see a test of 1080 and also a test of the $1,000 level. Okay, so that's essentially what's happening in the currencies, and yes, these are some times that we have to keep our powder dry for our investments. A lot of folks think that when you trade currencies, that you will start to see equity gains every single month. That is fantasy land. What we're speaking about is real world trading and real world opportunities. And as when you are trading, if you set expectations that you are going to be making equity highs every month or every week, you're setting up yourself for failure. You have to have a realistic basis of what can happen to your trading account, so you don't feel discouraged, because most of trading is psychological. And if you feel discouraged or get discouraged, what that will cause you to do is abandon your trading plan, and when the markets do start to really trend, you miss out on the trend, and then you get even more upset with yourself. So keep your powder dry, keep looking for the opportunities, and they will definitely come, because that's how the markets operate. If you like to get aboard these trading signals, so we have some folks getting aboard the trading signals now, because they recognize that yes, the markets are consolidating, but when it starts to move, our strategy will really start to pick up. You can click on the link below to get started. Thank you very much for listening, and I hope you have a wonderful day.